And the only thing that the more paranoid conspiracy types need to worry about is that in a so-called cashless society, every digit is tracked. So you cannot do anything without being watched, which is why they're taking away this 500 euro bill in Europe, which was being used primarily for criminal groups and that to trade assets or exchange goods and so on. In the rest of the world, there'll still be a lot of U.S. dollar bills and that floating around because those economies aren't yet all digitized the way we in North America and Europe are.
The world faces peak gold according to Goldman Sachs, but one geologist who's discovered more than 30 million ounces of gold says he knows where to find America's hidden gold deposits. Featured on the History Channel's How the Earth Was Made, this expert gold finder could be on the verge of a massive gold strike. Even a billion-dollar gold giant has engaged this small market cap company to use their proprietary technology. For the thrill of gold discovery with a new edge in Nevada, visit crushthestreet.com/gold.
Hello everyone and welcome in to crushthestreet.com. We have a returning guest today. His name is John Kaiser of KaiserResearch.com. He's a world-class mining analyst. He's a sought-after keynote speaker and a popular guest at investment conferences. And in our previous discussion was actually at San Francisco Silver Summit. It was a few months ago, last November. A lot of things have happened since last November. So, John Kaiser, thanks so much for joining me today.
Kenneth, it's a pleasure to be back on the air with you.
John, we are currently seeing some pretty exciting upwards moves in the precious metal sector here in 2016. The GDX, for instance, I'm looking at it right now on my screen. It was up as high as, I think, 4% today. It's in the $19 range, and just a month ago it was in the $12 range. Huge move. So I got to ask you, since our last discussion, what is triggering this upwards movement here with precious metals?
Well, we go back the last couple of years, and each of the last couple of years we've had strong uptrends for gold heading into the new year. And in both cases, the first time in 2014 it was due to the Ukraine, and last year we had concerns about the Eurozone again. But in March, after the Prospector and Developers Association conference in Toronto, gold price failed, and we ended up in a pretty bad bear market year. Both years finished off the year miserably, and this year we started it off not particularly well either. We had the worst opening for general equities ever. And this time there's something different going on. In the past, gold rallies have always been based on the idea of, there's hyperinflation coming, there's fiat currency debasement happening, and of course these explanations as to why gold should be going higher have been proven completely wrong. This time around, there's a different story. It is the idea that the austerity created by the anti-Keynesian movement has indeed put the world on course of a form of secular stagnation where growth is slowing very badly. We have weak oil prices that are undermining oil-producing nations, their economies. It's a vicious circle. And so now the monetarists who have got zero interest rates are now undertaking negative interest rates, and that frightens a lot of people. The idea that not only do I make next to nothing on my savings that I've piled up to prepare for a very uncertain future, now they will gradually take bits and pieces of it away over time, eroding my savings. So there has been a shift, I think possibly among retail investors in particular, back into physical gold, which you only have the storage cost. And of course, if you own the ETFs, such as GLD, then you don't even have the storage cost. So gold this time is being driven by the fear that we are indeed heading into some sort of recession, deflation, and because the no fiscal stimulus is permissible, under the various regimes that control all these countries, the monetarists, the central banks, have to go into negative interest rates in a desperate effort to try and stimulate the global economy.
John, so you answered my next question, which was, is this a fear trade? And obviously we saw some pretty volatile moves here in the U.S. Do you see this as more of a global thing as far as the aspects for how it will affect precious metals? Or, I mean, is the U.S. economy struggling going to be a major player in why we see precious metals go higher?
Well, the United States economy is amongst the best performing in the world. Of course, that's a relative statement. We have a substantial slowdown in China. They have higher GDP growth, but in terms of overall size, the American economy is still the strongest. However, its strong dollar is undermining its own export economy, and they have decided to pause their interest rate increases, the attempt to normalize interest rates because of the instability that this is exporting around the world. And that is the big concern now, is that the United States will topple over and join the rest of the world in a gradual decline, rather than be the tugboat that tows all these economies back into the green.
John, you talked about negative interest rates and what that will do to the fear and people's money. Do you believe that we are heading towards a cashless society? And how will that affect precious metals? Will that be a positive for precious metals if we do head that direction?
Well, by cashless, that just means that you're not carrying around physical bills and so on. It's still a monetary currency fiat system. So that's not going to change. And the only thing that the more paranoid conspiracy types need to worry about is that in a so-called cashless society, every digit is tracked. So you cannot do anything without being watched, which is why they're taking away this 500 euro bill in Europe, which was being used primarily for criminal groups and that to trade assets or exchange goods and so on. In the rest of the world, there'll still be a lot of U.S. dollar bills and that floating around, because those economies aren't yet all digitized the way we in North America and Europe are. I don't think it has any implications for precious metals. Precious metals are an asset class on their own. People like the physicality of it. They like that it holds its value, at least in relative terms, over the long run, even though it may, on the short term, be very, very volatile. I mean, here's the irony. If we do go into a depression and we have asset prices collapsing because of a deflationary spiral, the price of gold will actually go down. However, your cash, your so-called cash in the bank, even if it's being charged a negative 0.1%, is still going to be absolute, whereas your gold price may go back to $1,000, where Goldman Sachs wants it to be.
Well, I guess the point of my question with cashless societies is exactly what you said, and that is that every dollar is being watched. So would it be easier for them to control precious metals prices if they wanted to, kind of keep a barometer for, hey, fiat currencies are credible, and you know, not having people jump ship to the fear trade?
I don't think there's any effort to control the price of gold. I mean, all the gold that exists, 5.4 billion ounces, is worth, what, $5-6 trillion? When you look at all the value of all the other asset classes, which are in the hundreds of trillions of dollars, gold is inconsequential. The idea that there's some overlord somewhere monitoring it and manipulating the price of gold to prevent the people from realizing that everything is some sort of sham is such utter nonsense that I just shake my head every time I hear that. Gold is driven by supply and demand, and yes, they fool around on a short-term basis in the in the futures market. But the ETFs, I mean, they actually store real gold. They have real gold allocated to it. And one of the problems with the gold uptrend right now is Indian and Chinese demand is actually quite soft, and gold is trading at a $25-$30 discount to the Western market price at the moment, suggesting that the good sort of jewelry, a long-term saving type of demand is not as strong. And the ETF, you can turn around and sell that tomorrow if you think the trend is reversing. So we have to be careful about how sustainable this gold uptrend is at the moment. You do have to monitor the bigger picture. I don't see gold rocketing to $2,000 anytime soon. However, if the United States were to move to negative interest rates, that would be a huge shockwave. I mean, Europe, fine, they're already doing it, but that's Europe. But if the United States started resorting to that as a strategy to try and stimulate demand, then I think we could see a much bigger audience shifting into the ETFs, and that would drive up the real price, the price of physical gold.
Well, John, let's shift over into the mining sector. I mean, obviously, we've seen some pretty massive moves, which actually preceded the gold and silver price increase. So let's start there with what we're seeing. Why did the mining sector lead gold and silver? Like, what happened in that arena that is shifting the trend here?
Well, the gold producers have been in a bear market since 2011, which accelerated in 2013, and December was pretty much sort of the washout. Funds that were undergoing redemption runs, they had to get rid of their positions in stocks like Barrick and Newmont, and all these big companies. They've seen the writing on the wall. They are shutting down their money-losing operations, cutting back their spending, fixing their debt problems. And so when that sort of tax loss selling, fund redemption, liquidation window closed at the end of the year, we saw a sharp rebound, and you are correct. We saw Barrick and Newmont move before gold actually started to move. However, we also saw, interestingly, within about the first week of the new year, we saw the gold ETFs actually start accruing ounces rather than losing ounces. And we've seen something like a 15% increase in the GLD holdings since then. So I think the market's telling us that the worst is over. Those that are crippled continue to worry, but in the gold sector, so long as gold doesn't swoon back below $1,000, we're looking at a better future. Whether we see substantial gains from here onwards for the Barricks of the world, that would depend on gold continuing an uptrend, hitting, say, $1,400 in the next 4 months or so.
So that's actually what I was going to ask you next. With oil coming down, we are seeing are we seeing a break even for these mining companies come down as well? I mean, what is the sweet spot for gold to trade at? And maybe that answer is 1,400. That would ensure significant profits for mining companies, likely to attract the big money back into the sector.
Well, the price of oil, I mean, a lot of mines that do not have that aren't hooked up to an electricity grid rely on diesel as their primary fuel, and we are expecting that those operations this year they're no longer hedged with substantially higher oil prices the way they were last year. So we should start seeing some improvement on the bottom line from the lower oil prices. However, going forward, people have always seen a rising oil price as a sign of inflation and so on, and have seen that as bullish for gold. But now we have a divergence. Oil is sitting here at $30. The Saudis just came out yesterday and said it doesn't look like we're going to be able to cooperate and cut anything, so we're going to work on freezing it. And we want Canada and the United States with their oil sands and their shale oil. We want them to fold their cards, go home, and give up their big chunk of the oil market, and then we'll be back to $60 to $80, where we're all going to be better off.
Okay, so that's kind of what's happening with that. So, John, then what's the opportunity with exploration companies in this environment where we might see a higher gold price, but exploration companies aren't necessarily benefiting from a higher gold price directly, but what is the indirect benefit that exploration companies receive in this environment?
Well, if you recall back in late November at the Silver Summit, I mentioned this idea of the popcorn effect, where after you've had a pan of corn kernels sitting there doing nothing and either burning up, bursting into flames, or shriveling and turning black, we are undergoing a subtle turnaround in the market's attitude towards exploration companies. The winnowing of the last 4 or 5 years of market downturn has pretty much wiped out 800 companies, the ones we call zombies that have negative working capital amongst the Canadian juniors. That they owe like $2.5 billion. The 500 or so companies left that have positive working capital have about $1.6 billion in their treasuries. And what we're seeing now is we're seeing companies issue interesting results that suggest that they are coming up with new discoveries, and you're seeing individual stocks pop up. At the end of the year, I put together my 2016 Bottom Fish edition, which was 100 companies amongst the Canadian juniors that I felt were the best ones in terms of management, interesting stories, in some cases ounces or pounds in the ground, the ones most likely to benefit from a turnaround. In fact, I would say there will never, ever be such a fabulous bottom fishing edition because of this convergence of all these negative factors taking down strong groups, creating incredibly cheap values. And this group of companies is already up 24% from December 31st when I put it together. So I like this environment. Gold back here at $1,200 plus. If it stays here and somehow bounces around between $1,200 and $1,400, that lowers the bar for what counts as an interesting gold discovery. It's much better than when it was there between $10.50 or so, threatening to drop below $1,000. In which case, it's really hard to make a new discovery that's going to be worth anything. But now that the public is seeing that gold's no longer heading down to oblivion, they're much happier to look at the exploration companies. There isn't yet a huge confidence that gold's going to rocket to the moon. We don't need that for exploration companies. And for the ounce in the ground companies, what you're now seeing is the bigger companies are absorbing the companies that are down 95% from their peaks 4 or 5 years ago, and they're giving them 100% bump from rock bottom prices, and you're seeing capitulation, fatigued shareholders just tendering to the offer. So the big gain that one would hope to get from owning these distressed juniors with ounces in the ground, at best you're going to get 150%. But the running room is really the junior that has an emerging new discovery, because no big company will touch any of those until there is a resource estimate on the table.
John, I want to get an update from you regarding a company that we did discuss over at the Silver Summit, which is Nevada Exploration. And I mean, is this one of the companies that you have in the Bottom Fish report that you released?
Yes, it is one. It is one of the bottom fish companies, and this company had to undertake a reorganization last year. They have this fantastic story about using groundwater geochemistry to identify blind targets hidden under the gravels of Nevada in areas where we know there are world-class deposits where 300 million ounces have already been identified, and this type of turn is very positive for a junior like that, which has an innovation strategy. Because now as the market, as investors come back, they're looking, okay, what edge does the company have? Are they just sitting on that same old property that they Swiss cheesed in the past, and they're going to try and rethink it and maybe drill at some other angle and finally come up with a high enough grade to initiate a discovery delineation? That is, in fact, a legitimate approach, but one needs to understand or hear from the geologists why they think that the work they've already done in the past was inadequate to tease out into view what they think is really present and that is potentially worth mining. Something like Nevada Exploration Inc., which generates big brand new targets such as Grass Valley South, in areas where you can see a monster gold mine, Cortez Hills, 30, 40 kilometers in the distance. This is the type of story that should be appealing to investors, especially since companies like this will be able to attract money and get their exploration campaigns ramped up again heading forward. And stories like this don't die with the next drill hole. They are process stories. They are method stories. So I'm a shareholder in this company. I think finally this company has turned a corner and is ready to establish a much higher profile.
Yeah, and what a time to be doing that, especially now that we're seeing this uptick in the exploration and precious metals arena at the moment. So, John, what is the opportunity that exists in Nevada? How underexplored is it?
Well, if you've ever flown over Nevada, you'll notice that there are these big ranges that run sort of in the northeast direction, separated by broad valleys. And this was created 15 million years ago, well after all the gold deposits were laid down. So literally what happened, because of the stretching of Nevada, the mountain ranges popped up and the pieces in between dropped down, and eventually the mountain ranges got eroded and filled the basins with sometimes several thousand meters of gravel. But the really interesting thing is half has been exposed and available to prospectors climbing all over and banging away with their hammers and getting samples and that. And the other half has been invisible because it's hard to see through gravel. You don't know what the bedrock is. It's expensive to drill holes through it. So literally, I would say half of Nevada's gold potential remains hidden under the gravels of northern Nevada. And that's where the hydrogeochemistry technique is brilliant, because you sample water which flows from the mountain ranges through the gravels, along the bedrock, and oxidizes any mineralization there, picks up all the toxics such as mercury, arsenic, thallium, and so on, but will also pick up gold in very minute levels. And interestingly, it wasn't possible to assay for gold in groundwater 15 years ago. The detection limits of the labs were simply too low. So even though this kind of stuff has been done for copper in Arizona since the 60s, for gold, it is only the technological innovation in the labs that has made it possible to test groundwater for the presence of gold. And you really don't want to discover a body of toxic mineralization. You want to find a body that has gold mineralization along with the toxics. And the Carlin-type deposits that represent those 300 million ounces in Carlin, Cortez, Battle Mountain, Twin Creeks, and so on, they are associated with these toxic elements.
John, getting back over just to general mining, with a lot of these companies depleting their high-grade resource in a low precious metals price environment, what is this going to mean for future production and the mining sector going forward?
Well, grade flexing, where you mine where you're supposed to be mining the low grade during strong metal prices and higher grades and low metal prices, if it carries on too long, will render deposits difficult to mine. You need substantially higher metal prices down the road to justify mining the stuff you left behind while you took out the high grade sweet spots. In terms of metal prices, it's very difficult to quantify what curtailing the life of a mine at the current metal prices is really going to do for the metal price. You got to keep in mind there are 5.4 billion ounces already out there held by somebody or other who may want to sell it tomorrow. So it's the behavior of the owners of that gold, not the companies that are churning out 80 million extra ounces on top of that annually, who are going to affect the price of gold.
So, John, final question. Will gold lead the other commodities in its upwards move? And with that, is that like, will we see silver follow gold, or will they just kind of do their own thing?
I think when you consider the nature of the presidential nomination race in the United States, and a lot of this populist turbulence we're seeing in other countries in Europe and so on, the idea of geopolitical disruption, lots of things going wrong in the world, completely unimagined stuff like some person such as Trump or Cruz, who don't really know anything about foreign policy, possibly being elected as president of the biggest economy and military superpower, that has to be a reason to be anxious about the future. So I think the anxiety driver for demand for gold is not going to go away until we find out who is going to be the next president. I mean, perhaps somebody like Michael Bloomberg does throw his hat into the ring and runs as an independent and ends up elected, and then since he's not from the Republicans or Democrats, there's a possibility for these two parties to heal themselves and become proper actors on the American and the global stage, rather than the my way or the highway type of mentality that has set in. Then we could perhaps see stability and so on coming, but I'm not sure that's going to happen. So I think the gold demand will persist for both the negative interest rate anxiety reason, but also because of this geopolitical anxiety about what on earth is happening to the leaderships of the modern world. And that's different from all the other commodities, because those ones are driven by simple supply and demand from the global economy, which in this context of what's happening in the United States this year, the global economy is not going to get a big boost of confidence from that.
So, John, you don't believe that silver will be dragged up with gold if we do see gold go higher?
When you track the gold-silver ratio, it is all over the map over the long term. However, when gold does develop an uptrend, it always tows the price of silver along with it. And you've got to keep in mind, too, that silver is a byproduct of a lot of base metal mines, some copper mines, some zinc mines. And as we see the commodities, the primary metals, continue to be under stress and weak prices, you're going to see more and more of that production curtailed. So that could take some of the byproduct silver supply off the market and enable silver to track gold's uptrend more easily than has been in the case in the last few years, when everybody is pumping out the metals like crazy, and the silver, nobody cares what it costs. It's just this free byproduct that they sell for whatever they can get. That dynamic may change this year.
John, if people want to learn more about you and read your information, where would they go and what would they find?
To go to KaiserResearch.com, and there's all kinds of links there to explore. You can see what my style is by clicking on the general release schedule and clicking on those items which are no longer restricted. But if you want to see the bottom fish list, that would cost you $100 for 30 days. It would give you access to everything. The entire search engine is probably a worthwhile investment if I am correct that we are in a subtle turning point for the juniors, that the worst is over, and the elite, the surviving elite, is going to do extremely well. And you can also find your ounce in the ground companies too, but you'll also especially find the explorers, and those have been the ones that have moved the best amongst the ones that aren't yet in production or pre-production.
Well, there you have it, everyone. John Kaiser, his analysis, he does a lot of research. He is out there finding the best companies and the best opportunities. So, John, thank you so much for coming on the show and sharing your knowledge and research with all of us today.
Kenneth, it's been a pleasure. Thank you.